What struck me is how contradictory it feels on the surface and how consistent it becomes underneath. The traders are wildly different in style, personality, and background, yet they keep circling the same principles in different language.
That consistency surprised me too. At first glance, it feels like a celebration of elite intuition, almost the opposite of the random walk idea. But the deeper you go, the more disciplined and rule-bound these so-called wizards actually are.
Exactly. The myth is that they're instinctual geniuses making bold bets. The reality is that most of them are obsessive risk managers who survived long enough to be interviewed.
That's an important point. Survivorship bias is lurking here, even though Schwager is careful. We're hearing from people who made it, not from the countless traders who used similar methods and failed.
Yes, and that tension never fully disappears. The book is inspiring, but it's dangerous if read as a how-to manual rather than a study of psychology.
Let's start with the basic premise. Schweiger interviews highly successful traders across markets and tries to extract common traits. Did you feel like he succeeded?
Partially, he succeeds in identifying patterns, but he's careful not to turn them into formulas. The common traits are more about mindset than method.
Things like discipline, risk control, emotional awareness.
Yes, almost everyone emphasizes cutting losses quickly, respecting risk, and knowing themselves. The strategies differ wildly, but the internal rules are strict.
That's interesting because from the outside, trading looks chaotic. High stakes, fast decisions, constant uncertainty. Yet the people who last seem to impose extreme order on that chaos.
They have to. Without structure, the market will psychologically dismantle you. Several traders talk about early periods of overconfidence followed by devastating losses.
Those early losses almost feel like initiation rituals.
They do. Nearly every wizard has a story of being humbled early on, and those who survive internalize that pain into rules.
Which brings us to ego. The book seems to suggest that ego is the biggest enemy of traders, even successful ones.
Absolutely. Ego wants to be right. Markets punish the need to be right. The traders who last prioritize being solvent over being correct.
That feels like a direct challenge to how intelligence is usually rewarded.
Yes, in most fields, confidence and decisiveness are praised. In trading, those traits can be fatal if they override humility.
Let's compare this to Malkiel for a moment. Malkiel says you probably can't beat the market. Schweiger presents people who clearly did. How do we reconcile that?
By recognizing scale and rarity, Market Wizards doesn't claim these results are easily replicable. It shows what's possible, not what's probable.
So these traders are exceptions, not refutations.
Exactly. And even many of them admit that luck played a role, especially in timing.
That admission of luck stood out to me. It's surprisingly honest.
Yes, and it distinguishes wisdom from arrogance. They acknowledge variance. They just manage it better than most.
Risk management feels like the spine of the book. Position sizing, stop losses, capital preservation. Did that emphasis surprise you?
It surprised me the first time I read it years ago. Now it feels obvious. Big wins don't come from boldness alone. They come from surviving enough small losses.
There's almost a moral lesson there.
There is. Survival precedes success. You can't compound if you're wiped out.
Another thing I noticed is how personal each trader's system is. There's no universal method.
That's crucial. Schwager makes it clear that systems must fit the trader's psychology. A strategy that works for one person could destroy another.
So self-knowledge becomes a competitive advantage.
Yes. Knowing your emotional thresholds, your tendencies under stress, your tolerance for drawdowns.
Here's an imaginary scenario. Two traders use the exact same strategy. One succeeds, one fails. According to Market Wizards, why?
Execution and psychology. One follows the rules consistently. The other bends them under pressure. Same system, different outcomes.
That's unsettling because it means knowledge alone isn't enough.
Exactly. The market doesn't reward intelligence in isolation. It rewards discipline under uncertainty.
Many of the traders talk about having very few truly great trades in their careers. That contradicts the idea of constant action.
Yes, patience is another recurring theme. Waiting for high probability setups, even if that means long periods of inactivity,
Which again runs against human instinct.
and against how trading is marketed.
Let's talk about pain. Losses are described vividly. Emotional pain, self-doubt, sometimes near ruin. Why does Schwager emphasize that so much?
Because pain is the teacher. These traders aren't protected from suffering. They're shaped by it. The difference is that they learn instead of retreating or doubling down blindly.
That learning process feels brutal.
It is. And that's one of the book's implicit warnings. Success in trading demands psychological exposure most people aren't prepared for.
So the glamour hides a cost.
A very real one.
Before we go further, I want to ask you this. Did reading Market Wizards make trading feel more or less accessible to you?
Less accessible, but more understandable. It demystified success while making it clear how demanding it actually is.
That's a subtle distinction.
Yes, the curtain is pulled back, but what's revealed isn't comforting.
Which might be the book's greatest service.
I think so. It replaces fantasy with reality.
All right, let's hold here. Next, I want to talk about intuition versus rules, luck versus skill, and the psychological toll these traders openly describe. Let's pick up right where we left off, because intuition versus rules is one of the most misunderstood aspects of this book. Many readers come away thinking these traders are guided by some mysterious inner sense. But when you look closely, intuition seems to be something else entirely.
Yes, intuition here isn't magic. It's compressed experience. It's pattern recognition built from years of feedback, pain, and repetition. And even then, most traders don't trust intuition unless it aligns with their rules.
That alignment is critical. Several traders explicitly say they ignore intuitive feelings if the trade doesn't meet their criteria.
Exactly. Intuition without structure is just impulse. The wizards respect intuition, but they cage it.
That's such a vivid way to put it. They allow intuition to suggest, not decide.
Yes, decision-making authority belongs to the system. Intuition might flag something unusual, but risk management has veto power.
This challenges the romantic image of the lone trader making heroic calls.
It does. The real heroism, if you want to call it that, is restraint.
Another recurring theme is independence. Many of these traders actively avoid consensus thinking. They distrust crowd psychology.
They do, but not in a contrarian for its own sake way. They're not reflexively against the crowd. They're against unexamined agreement.
So they're selective contrarians.
Yes. They question narratives, especially popular ones, but they're willing to align with trends if the data supports it.
That nuance is often lost. People hear great traders go against the crowd and assume constant opposition.
Which is dangerous. Many wizards emphasize trend following. That's literally going with the crowd, just earlier and with clearer exit rules.
That brings us to exits. The book spends a lot of time on getting out, far more than getting in.
Because entries are seductive. Exits are humbling. Knowing when to admit you're wrong is the difference between a loss and a disaster.
Several traders say they don't even think about potential gains first. They think about where they're wrong.
Risk, first thinking, define the pain before the pleasure.
That's almost inverted compared to how most people approach decisions.
It is. Most people imagine upside and rationalize downside. These traders reverse that instinct.
Let's introduce another imaginary scenario. You've had a series of successful trades. Confidence is high, you feel invincible. According to market wizards, what's the danger?
That's the most dangerous moment. Overconfidence leads to larger position sizes, looser rules, and selective perception. Several traders explicitly warn that success can be more dangerous than failure.
which is counterintuitive.
Yes, failure makes you cautious. Success tempts you into believing the rules no longer apply.
So discipline has to be strongest when things are going well.
Exactly. That's when ego quietly reasserts itself.
Another thing I noticed is how many traders describe trading as psychologically exhausting, even when profitable.
Especially when profitable, because you're constantly fighting your own instincts. Fear, greed, impatience. It's not a relaxed process.
Some even step away after big wins.
Yes, to reset emotionally. That shows a deep awareness of their internal state.
This level of self-monitoring feels almost clinical.
It has to be. The market exploits emotional leakage instantly.
Let's talk about luck again. You mentioned earlier that many traders acknowledge it. How do they distinguish luck from skill?
They look at process, not outcomes. A good trade can lose money. A bad trade can make money. Over time, only process compounds.
That's hard for humans to accept.
Very. We're wired to judge decisions by results, not reasoning.
Which creates dangerous feedback loops.
Yes, you reinforce bad habits if they happen to work once.
One trader says something like, "I don't care if I make money on a trade I shouldn't have taken." That worries me. That line stuck with me.
Me too. It shows long-term thinking. Short-term wins can corrupt discipline.
This makes Market Wizards feel less like a book about markets and more like a book about decision-making under uncertainty.
I agree. Markets are just the arena. The real battle is internal.
Do you think that's why people outside finance find the book compelling?
Yes, the lessons generalize. Risk management, emotional control, process orientation. These apply to entrepreneurship, leadership, even personal life.
Let's challenge the book a bit. Do you think Schwager overemphasizes individual agency? The idea that if you master yourself, success follows?
That's a fair critique. External conditions matter enormously. Not everyone has access to the same information, capital, or timing.
So the book might unintentionally suggest meritocracy in a domain where randomness plays a huge role.
Yes, that's why it must be read with humility. These are stories of success, not guarantees.
Still, the traders don't present themselves as infallible.
No, many openly discuss their worst mistakes. That honesty is refreshing.
And instructive.
Very.
Another imaginary situation. Suppose one of these traders had been born 10 years earlier or later. Different market conditions, same mindset. Do they still succeed?
Not necessarily in the same way, but I think many would adapt. Adaptability is one of the most consistent traits across interviews.
So flexibility might be the real edge.
Yes, rigid beliefs break in dynamic systems.
That adaptability contrasts with the rigidity of their rules.
It's a paradox. The rules are rigid, but the systems evolve. They update rules based on evidence, not emotion,
That requires patience and self-trust.
and a willingness to be wrong repeatedly.
As we move toward the final stretch, I want to focus on what this book ultimately asks of the reader. Not just as a trader, but as a thinker.
It asks for honesty, brutal self-assessment, accepting limitations instead of fighting them.
Which is uncomfortable.
Very. But that discomfort is the entry fee.
Let's pause here. Next, I want to talk about who this book is not for, the risks of misreading it, and what its deeper message might be beyond trading. Let's talk about who this book is not for, because that might be as important as who it's for. Market Wizards is often marketed as inspirational, but inspiration without context can be dangerous. Who do you think should be cautious reading this?
Anyone looking for shortcuts, anyone hoping to copy a strategy without understanding the psychological cost behind it. The book is full of success stories, but it quietly demands an extreme level of self-regulation.
So if someone reads it and thinks, "I'll just do what they did," they're already missing the point.
Exactly. What worked for these traders worked because it fit them. Copying the surface behavior without the internal discipline is a recipe for loss.
There's also the issue of time. Many of these traders spent years losing or barely surviving before finding consistency.
Yes, that part is often glossed over. The interviews compress decades into chapters. The struggle is real, prolonged, and uncertain.
Which raises an ethical question. Is it responsible to present these stories without equal emphasis on the many who tried and failed?
That's tricky. Schwager does acknowledge survivorship bias, but the human brain still latches onto winners. We're wired for narrative, not statistics.
So the reader has to bring their own skepticism.
Yes, and maturity.
Let's talk about the psychological toll again, because I think this is one of the most underappreciated aspects of the book. Even successful traders describe anxiety, isolation, and burnout.
Trading is solitary. There's no external validation in the moment, no applause. Just numbers moving against you. That can be mentally corrosive,
Some traders even say they wouldn't recommend it as a career path.
which is telling. When the people who succeeded warn you away, it's worth listening
So why does the book still feel compelling?
because it's honest about mastery. It doesn't promise ease. It shows what excellence actually costs.
There's almost a monastic quality to it.
Yes, discipline, sacrifice, routine. The glamorous image dissolves into something closer to craft.
Another imaginary scenario. Suppose one of these traders suddenly lost access to markets. No trading, no charts, no positions. Who are they without it?
That's a powerful question. Some interviews hint that identity becomes entwined with performance. That's risky. When your sense of self depends on outcomes, volatility becomes existential.
Which might explain why some step away after achieving financial independence.
Yes, to reclaim identity beyond the screen.
So the book also contains a cautionary tale about obsession.
Absolutely. Focus is powerful, but it has a shadow side.
Let's step back and ask the big question. What is the core message of Market Wizards, stripped of trading jargon?
I'd say this: success in uncertain environments requires self-knowledge, disciplined process, and respect for risk. And even then, outcomes are never guaranteed.
That sounds almost universal.
It is. Markets just magnify these truths.
Compared to Malkiel's book, which emphasizes humility through averages, Schwager's emphasizes humility through experience.
That's a great distinction. One says you're unlikely to be exceptional. The other shows what exceptionality actually demands.
And neither offers comfort.
No, but both offer clarity.
If a listener asked, "Should I trade after reading this book?" what would you say?
I'd say the book should ask why you want to trade. If it's for excitement or ego, this book is a warning. If it's for mastery and you accept the cost, then it's an education.
That's a thoughtful answer.
Because the wrong motivation is expensive.
Do you think the book encourages overconfidence in readers?
Only if they ignore its subtext. The explicit lessons are about control. The implicit lesson is about limits.
That implicit layer feels like where the real value is.
Yes, between the lines, the book says this is hard, rare, and unforgiving.
And yet it doesn't discourage learning.
No, it encourages respect. Respect for markets, for risk, and for oneself.
Let's end with a final imaginary situation. You're sitting across from one of these market wizards early in their career before success. What advice do you think they'd give themselves?
Probably something simple. Protect your capital. Protect your psychology. And don't confuse persistence with stubbornness.
That last one feels especially important.
Yes. Knowing when to adapt is as important as knowing when to endure.
If you had to summarize what reading Market Wizards does to a reader, what would it be?
It removes illusions about genius, about speed, about certainty, and it replaces them with process.
For me, it teaches respect, not admiration, not envy, but respect for the difficulty of operating under uncertainty.
That's well put.
Chris, thank you for another deep conversation. This book sits in a strange place, inspiring, unsettling, and honest.
Thank you, David. Those are usually the most valuable ones.
And to everyone listening, thanks for joining us. Until next time.